Good morning, everybody, and welcome to the Morning Volatility Report. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. Welcoming you to the Morning Vol Report. Hello! It's Wednesday, and again, for us, events. Is on Saturday. Sorry, I got a little tongue-tied. Saturday, we have 9:30 a.m. We're going to do, Mark will do the beginning. I'll do the second part of the class, where we talk about, more long-term investing and hedging with options, and especially basically using puts, using short calls. Again, it'll be, I would say, beginning to intermediate, and then we'll also talk about using the VIX volatility to help price and look for trade strategies long term. Okay, using some slightly longer term trades to help you manage essentially around equity portfolios or long positions. That is the bottom line there. And with that, let's see what we got today. Really, this is, I think, the story we have, and I'll just get to the futures. We have 1621. May vol now is 80 cents over or so, which is for, I guess we have 2 weeks to go to expiration, is about normal. What I'm really looking at to see is how the VIX cash market responds to or how the futures respond to the VIX cash market. We're getting a little bit of a sell-off today, and to be honest, I really don't know how long it's going to last. It seems to be it's like we had a couple of shots over the bow over the last couple days with Japan, with the yen flying, a lot of currency uncertainty, and it's flowed over into the vol market. We came up with a vol trade yesterday, and it just looks as if today, even with Australia lowering their interest rates, it's just none of it is great and bullish news when we traditionally have had pretty good rallies into the monetary policy or the sort of the QE era, I guess. Right now, it really doesn't look like we rally off that kind of news anymore. The market's taking it a little bit more with a grain of salt, and stocks just basically soften up. So to me, really the key thing is, if you see VIX move up, right, is the May and the June future absorbing the move. So we have a full $3 for June, which is, I would say, normal into this stage of the cycle. We're trading 19.25 for the June ordinary, but keep an eye on these futures, meaning like if you start really to see those futures start to jump a little bit more over the cash, or as the cash rallies, futures keep rallying. That is, traders are very jumpy with the futures. Could be short covering, who knows? But normally what you want to see is if the market tanks and it's kind of a dopey sell-off or whatever, that VIX cash goes right up into the future prices. They kind of absorb a lot of that. I haven't seen that the last week, where you kind of had this contango sort of existed. Normally it compresses a lot, which gives us a little bit more opportunity in VIX, because cash over future is it sets up for really, really cheap upside VIX trades, and we have not really gotten that yet. So again, I don't know if today's the day where we have the turnaround rally. We've been down for a few days now, mostly just on not great news. Nothing really awful, just nothing really not great. From some of the highs we've had, we're kind of down, and we're just right around this level. What was it, like 2053 is a big level, and we're just sticking around. Okay, so the big question: are we going to have any acceleration away from this spot, or is it just going to sit here and sort of die? So we'll price some butterflies. Even butterflies we might have put on earlier in the week still would be doing okay because we're moving. We're just not moving that much, and everything is just kind of like vol's going up a little bit, market going down a little bit. Other stuff, just keep an eye on gold. It's another one where when they're getting the inflation whiff, gold has been spiking. And like I said, we've hit that $1,300 an ounce level and just stopped dead in our tracks. And it's mostly also on the heels of central banks kind of paring back their QE. Like Japan, it seems like, are paring back. The ECB isn't doing anything new. And I'm feeling like that's kind of the end of that cycle. So I think we're going to see a little bit more market volatility this year as those banks pull out, if they do in fact do it. So with that, I expect a lot of sideways, to down activity, and we'll see how long, that lasts. But I think still the key is keep an eye on really where the market's starting to price volatility, and if traders start paying up for those levels, that's kind of the key thing that I'm looking for. All right. And with that, everybody, you all have a good day, and I will see many of you in our chat room later.